Assalamu alaikum. Welcome back again. So, if you remember, we were calculating the depreciation. So, we have so far calculated the depreciation of the first asset, which is land and building. So, let's sum up the amount of depreciation we see here. So, it starts from here all the way here. So, so we have got the 535 as the depreciation for fiscal 2022. If we flash fill up to the 2026, we get the value. Same for the second asset. You sum up the previous depreciations and then flash fill up to this, and then finally here you take the sum of this and then close and then do the flash fill, and the total depreciation comes to be the summation of the three depreciation of the assets. So we take this value plus this value plus this value. So that's how we get the depreciation, and so we can actually now put the depreciation expense from here. As you can see, we can put the depreciation expense here as well. So this depreciation expense equals to this one, and we can flash fill the same. But before that, we did not have any asset sales so far, so it will be 0, and we can sum up this entire column, and then we get this, and let's take and flash fill up to the last column of this sheet, and that's how we can get the net ending value of the property, plant and equipment for this company. So that's it. Now let's we move on to the balance sheet, and here we can now come to the property, plant and equipment here, and as you can see, we can replace this from this value, this one, ending net property, plant and equipment value. So that's it. So what else do we miss? So term debt, other non-current liabilities, common stock, retained earnings, and accumulated other comprehensive income or loss. So as you can see, we have here the shareholders equity section. So in this section we have the ending balance of the common stock and additional paid capital, which should be the summation of this column. Okay. And this ending balance will be the beginning balance of 2022, right? So we can do this up to this, and we can also do this like this. Okay, now so the thing is, we have this particular section in the statement as well, which is the retained earnings ending balance. So similarly, we take the summation, it equals to the ending balance, and it is basically the summation all the way up to the last column, and here we go. That's it. And what about the accumulated other comprehensive income? Also take the summation like this, and then okay, so we need to make sure that we do the same for other as well. Here we have dividend and dividend equivalence declared per share of this company. So we can see that the average is 0.83. So we'll be optimistic and take 0.85 as the dividend declare ratio, and hence we can see that we have something called dividends and dividend equivalence declared. So we need the net income, right? So from where we get the net income? So we can go to the income statement, and then we get the net income from here, right? So flash fill. Okay, no need to flash fill right now because we can do that all together. And then dividend and dividend equivalence declared, which is this one multiplied by the ratio, this one, right? So that's it. Common stock withheld related to net share settlement of equity hours, no idea. We can not forecast. Common stock repurchase, no idea. Cumulative effect of change in accounting principle, no idea. So what do? We just populate this after this like this. Okay, so you can recheck 129662. Yes, 129662, and then this one is G12, which is this one, multiplied by G27, which is this one. Okay, so far so good. What about common stock issued? So common stock withheld, share-based compensation, these are actually not forecastable easily.